Howdy, hot shots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. And I am smiling big. Ulti is just a chugga, a freight train marching its way back up. Now, will this continue? I don't know. But it's been looking pretty good for the last week and a half. And today, even with the dovish Fed coming out and only doing a 25 basis point cut, I've seen a lot of stuff sell off. Silver is down bigly. I have no idea why. It's a super undervalued asset. I think I've told you I hold SLV. And so I've held SLV for quite a while, actually. I started buying SLV 15 years ago, back during the last silver spike, and then I just sat there and watched it in wonderment as it wallowed in the dirt before it started building back up. And it has, and I cost averaged down, sold some puts, sold some calls, so I've been in that SLV game for quite a while. But I had no idea why it would go down. Rates get cut. That means, but maybe the reason that it went down is because there's a lot of people that believe, and I think we already saw a little bit of it, is that the 10-year bonds ticked up and mortgage rates might have ticked up a little bit. Even though there was only a 25 basis point cut, they were clearly hoping for more. The labor market is cooling. There's probably, they do a lot of double job counts and they manipulate the data a lot. Let's just get that out of the way. Like I've told you about the whole inflation rates and I've told the jobs, and they just manipulate everything to try to make whoever's in office at the time, whoever's the Republicans or the Democrats, whoever's in charge of the House, and they manipulate everything to try to make it seem like everything's okay. They try to hypnotize you with these fake numbers. But the reality is people drop off the job roles because they haven't had a job for too long. People have 2 jobs in their account, and people get a part-time job and they can't. If you dig into it and you look into it, there's just always some kind of, manipulation going on, whether they're changing the definition of something like a recession, like Biden, changed the definition of recession so he didn't have to say we were in a recession. They change the definition of what is a job or who's looking for a job or whatever. So, it's not as good as they say it is. But if they lie enough and enough people believe it, then it comes into reality because, enough people believe it, then they go out there and they spend their money and it makes a good economy. So sometimes their lies do serve a purpose for, the general public in addition to themselves. But they're always lying and manipulating. So people, I think, wanted to see a 50 basis point cut. They wanted to see that, and I had told you if it was only a 25 basis point cut, I thought there could be a sell-off because people were hoping for more, and that 25 basis points was already, baked in. It looks like that's what we had because a lot of stuff is down today. I mean, most of my account is red, but amazingly, and I did not expect this. With everything being red, my Ulti is still up today, 3 cents, which, for a covered call fund that is capping the upside, that these little incremental increases mean a lot. Now, maybe it's because they were able to capitalize on some of the volatility that happened today, because there was a lot of volatility today. I mean, there was a huge dip during the Fed meeting, and then it rebounded. So, it was up and down all day long. And if they were able to capitalize on some of that, maybe you could go watch that, what's he call himself? The ETF inspector. People keep telling me that he analyzes things pretty well. I've watched a couple of his videos. He's pretty sharp. So maybe go watch his videos and he'll talk to you about the individual trades. I would come back here and tell me if they actually capitalized on some of that volatility today. Hopefully they did. And maybe that's why the NAV is up a little bit. They had come out and said 9.26 cents on the distribution this week, which I think is like 0.002 cents lower than last week. I think that was 0.0928 last week, if I recall correctly. Anyway, very close. So we should be able to get a good chunk of shares. The price is up a little bit, but it's not up substantially. So our distribution will be able to drip back in and pick. Last week, I was able to get 57 shares in my main account. So, with those 57 shares adding to my distribution, hopefully my distribution is a little bit bigger today, this week anyway. And I'll be able to get at least another 57 more shares. So I'm just stacking those shares, stacking that income, and things are looking up. So I'm feeling pretty good about it at this point. I had told you all I was not selling Ulti, and I didn't sell one share. And I didn't sell any covered calls on it because the options in Ulti are pretty much worthless as far as I can tell. I mean, if you sell a put, a cash secured put, it looks to me like if you just bought the shares instead and held on to them, that you'd wind up with more distributions than the put is paying you. And if you sell a covered call, there's no premium at all. I mean, I think maybe you could get 5 cents, and then somebody's going to exercise those calls and take your distribution. They're going to come in and exercise those calls right before the distribution so that they can get the distribution instead of having calls with a strike price when the thing falls. So I really just don't see, some people say they're doing it and, maybe they're making a little bit of money, but I feel like just holding Ulti is better. Maybe somebody even said they went way out in April and sold a cash secured put, and it locked in a lot of the distributions that they would get. And I'm like, yeah, but did it lock in all of them? I really don't know. I mean, I guess we would have to wait till April to see what happened, because if the price doesn't go down there and they were able to, get that premium and then buy shares of Ulti with it or some other investment and then sit and wait and it never gets exercised, well, good on them. But if it winds up getting exercised, I don't know. The distributions will shrink as the NAV of Ulti goes down. And let me tell you something. Just because Ulti has gone up for a week and a half does not change my opinion that the Ulti NAV will go down long term. Okay, I want you to be prepared for that. If you're going to make the bet, you got to do the vet. But I am telling you, my opinion is if you buy Ulti right now, in 6 months, your NAV will be lower. Okay, that's my opinion. The reason I hold that opinion is because covered call strategies cap the upside. You cannot have a stock go on a big run and capitalize as much on that as you will on stocks that go down quickly. When they go down quickly, you're going to lose, a bigger portion of your NAV than when they go up quickly, you're going to gain. Okay? So yes, if everything was just green from here on out for 6 months, its Ulti price would be higher. The market doesn't think that's going to happen. Okay. Otherwise, calls would have some premium. Your $6 calls would have some premium. If people thought that, Ulti was going to $7, then you would be able to get more than a nickel for your $6 calls. Okay. So the market, the smart money, does not think that Ulti is going up. I may be dumb money, okay, but I don't think Ulti is going up either, not long term. What I want to see is that their NAV drops slower than their distributions pay out. I do not expect to get 88% or 84%, whatever the yield is today, out of Ulti each year. I would be happy with 40%, okay? And I think that that would be a reasonable amount that they could protect the NAV and still pay out, a distribution that would yield you 40% in total return. Your distribution yield will still be 88%, but I want to see like a total return of 40%. Now, is that likely? No, I mean, that's a very fabulous performing investment. I hope it happens. I think there's a possibility it could happen if they do a good job picking their stocks. Do I think it's likely? No. I hope it outperforms the S&P 500. I'm not piling a bunch more money into Ulti. I've got my position set, okay? I've got, whatever it is, 4,400 shares now or something like that. That's all I'm doing, okay? Other than drip. I'm still dripping, so I'm picking up, 65 or 70 shares a week, whatever that is. I'd have to go through all my accounts and add it up. But that's the position I have. I am now looking to build a position in QQQI. And probably WPay. I haven't bought any yet, but I'm probably going to be buying some of that. I'm looking to continue adding to my GDXY position. I'm looking to add SPY. I don't want all of my risk in one investment, even if it turns out that it was a great investment. Obviously, in hindsight, I'd be like, oh, well, if I could see the future, I would have bought all of this. Yes, I'm not an idiot that, well, maybe I am, but I would still choose to have better returns. But I don't know the future. And so I don't want all my eggs in one basket. Now, a lot of people out there are doing that and they're crushing it, okay? And I'm not criticizing them. Everybody has their own level of risk tolerance. For me, I would much rather be getting 12% from this fund and 15% from that fund and 88% from that fund and 35% from this fund and 45% from this other fund and have a whole basket of them, so that when the NAV drops on one of them, maybe the NAV is going up on the other one a little bit and it balances each other out, right? So I'm essentially creating my own covered call ETF portfolio. Now, YieldMax does that. And one of the funds I'm really happy with is YMAG. Okay, I think it was YMAG, or is it Maggie? I can't remember which one I have right offhand, but it's been doing really well. It's actually grown a couple percent. It's still paying a good distribution. So I'll probably be adding to that one too, which is the Magnificent Seven, which is like Meta, Google, Amazon, Apple, Netflix, Tesla, and what's the last one? Palantir, maybe? Maybe Palantir? It might be. I don't know what the Magnificent... Oh, NVIDIA. That's what it is. It's not Palantir, it's NVIDIA. So I've been happy with the performance on that fund. So I'll probably be adding to that. And then at some point, when my income is large enough from all these funds that I can live on it, then I might start taking some distributions and putting it specifically towards growth. Taking my distributions that I'm not utilizing and putting it towards VGT or VOOG or SPMO or, a growth fund of some sort. And so that is a way that I would say that you could get some income and still get growth too, is just do like a 50-50 split, right? Like 50% into income ETFs and 50% into growth ETFs. That way you are getting the growth that's going to offset the NAV decay on the income funds, but you're getting the income that you need to live on right now. So anyway, I don't know what's going to happen tomorrow. I would expect that if bond rates go up a little bit, that's going to create this risk-off mentality where people move out of stocks and they move into bonds and they move into CLOs and stuff like that. And they move into those risk-off assets. So I would still expect, because of the way that the market closed today, I would say that we potentially have a red day tomorrow too. But I am very impressed with that chugga freight train of Ulti going up each day in the face of tons of other assets going down. So I'm very happy with that. And listen, I'm not saying that I wouldn't be happy if it went to $7. Of course I would. That would give me a huge cushion. I just don't think it's going to happen. So anybody out there that thinks that I'm just out here like saying that Ulti to the moon, I don't think so. I think it's going to go down over time. I just hope it goes down more slowly than it builds my bank account with its distributions. All right. I'll talk to you D-Gens later.